Okay. Hi, my name is Tam. I work for Life Changing Lending as a senior loan officer here at the company. I've been in this business for about 5 years now. My main focus mainly on the fix and flip and on the ground up constructions. So for this first episode, we will be talking to Adam regarding the fix and flip and how do we build a relationship between the builders and the lenders, and what's going on between those relationships to make sure that the projects went smoothly. So, Miss Adam, please tell me a little bit more about yourself, what you do. I'm sure a lot of people already know what you do, but give a little background for folks that never heard of you.
Yeah, no, absolutely awesome, man. Good to see you again, Tam, and great to talk with you guys. So yeah, Adam Etzler here, Top Notch Construction. Do pretty much everything ground up residential wise. Getting into some, new builds and a different complex additions. Even do some suite build outs for commercial. So we've handled everything from your, lipstick on a pig rehabs where you're just cleaning things up and all the way to complete firehouse burn downs and hoarder houses. So we've done quite a big gamut of things, and through over probably, I've got to count them, but over 100 different types of projects in the last few years. Permits to, like I said, everything. It's
Gotcha.
been
So,
good.
yes, sir. So most people they never know the, especially for new investor, whenever they come into the industry, they always thought the relationship is mainly focused on the borrowers and the lenders. But the fact is, the builder play a very important role as well. Without a builder, without choosing the right builder, your project could be, delay, could cost a lot of money. Uh, you
That's for
never
sure.
able to get things done, right? So one of
Yeah.
the example that I can give perfectly is one of my previous loan. Um, One of the client bought a property from a wholesaler. Uh, they when they buy it, the wholesaler, I guess, undervalued the property, um, undervalued the rehab by a lot, even though it's
That
a
doesn't happen.
yeah, unfortunately. So because of that, the investor is brand new. He never worked with builder, so he picked um he just based on the word of the builder, right? Without actually
Hmm.
physically walk the property. So that's one of the issues that we're facing in the industry. So in that situation, the builder was quoting that the for a fire damage house was $50,000, which nearly impossible.
Yeah,
Um,
unless it's a shoebox.
Correct. So, long story short, the whenever we ordered the appraisal to come back, it came back double the amount because it's a really big house. There's no way, like I said, there's no way that house is gonna renovate for $50,000. So the reason I brought this scenario up is I just want Mr. Adam's opinion about it, right? So when you walk the
Hmm.
property, what's your process of evaluating the property? Um, how do you estimate the cost of repair to make sure that, let's say, the appraiser go out there and make sure that the number doesn't, miss that much, like in this situation wise?
Right, right. Yeah. So I actually have a presentation that I've been doing now a few times called I don't know, something along the lines of like how do you estimate and like a pro for your rehabs. And what I do in that presentation is I go through the contractor's vision, right? So when you see a house of any stature, there's always a process, right? And especially in building and construction, you've got to have organization, right? There's so many logistic uh, elements to a project. I can have anywhere from 50 line items to 300 line items. And so just knowing your way around the house, the order of things, like I said, called critical path is very, very important. So just speaking to that, you've got your big five, right? So you start with your big five, your MEPs, which are your mechanicals, also known as HVAC, your heating and air conditioning, all your ducts, exhaust fans, stuff like that. Then you've got your electrical, which is your E, and then you have your plumbing, which is the P. So your MEPs are huge. Those are always going to be permitted. So you always have to make sure that you got those nailed down first, because they're going to cost you the most and you're going to have to pay the highest dollar usually to get those done, because they take certified licensed professionals. Then you have structural in there. You got to make sure that, you know, if it's a fire damage like yours, like you're talking about there, that one, or the one we just got done, you're going to have possibly windstorm. You're going to have a structural engineer reports that are going to tie into IECC, the energy. Man, I'm missing the word, but the energy codes, right? So it's got to be all buttoned up from the outside in, and then from there you're going to have the foundation of the house. Foundation's got to be on point. You got to know what's going on with that, because it doesn't matter what you do with anything on the inside if you're putting windows in on a slanted house or something that's going to have to get adjusted later. You're just double working yourself, right? So these are what I call kind of the uglier things, but they're so critical to the nicer things, the kitchens, the baths, the pretty stuff, and then obviously the roof. You got to have your roof. You got to make sure that no water, no elements are getting in. So that's really where you start, and it's not necessarily always the funnest parts, but you get those things done right. You got to think with the end in mind, right? So a lot of people are like, oh, the high glitz and glamour, right? Or I can get it done cheap, but you got to think with the end in mind. What's the goal at the end of this? What's your exit strategy, right? Oh, I'm going to sell it. Okay. Well, if you're going to sell it, how are you going to sell it? MLS. Okay. Well, when an MLS buyer comes in, they put it under contract. What's the first thing they do? What's the first thing that an MLS buyer does? They go get an appraiser and an engineer or inspection, right? So you get that inspector out there, and all of a sudden things don't pass, you got a big problem. So definitely got to stick to that critical path. You got to make sure all the mechanicals, all the operations of the house are done right. Make sure those are budgeted first. Then you leave it off to your design items.
Correct. So when you brought up the situation, whenever you listed on MLS, it brought me up to another case that we are currently working on. So the so the buyer bought a property that's listed on MLS, just like you said. Uh, there's some minor differ issues with the house, but they, I guess the seller didn't disclose it or whoever fixed it up, they didn't do it correctly. So it's end up costing the buyer an additional money
Mm.
to fix up the property. Um, well,
Money and time, sure.
correct, money and time, and then we're supposed to close, the deal before, but now it's kind of drag on and waiting for the projects to close, and then it caused, to delay the term and it caused the rate to go up. Pretty much a bunch of other issues down the line. So
Mm-hmm.
it's always good to pick the right GC at the very beginning, whether it's licensed or not. That's up to the
Mm-hmm.
buyer and up to the borrowers. But
Yeah.
we always recommend someone that has a license, and at least, do some background research on them first, see, hey, what kind of project they done, um, anything about
Well,
them.
yeah, and speaking to that, that's kind of the Wild West that we're in Houston and Texas, because
Correct.
when you speak to licenses, the GC, and you probably know this, you're probably speaking more into having licensed trades, but the GC doesn't have to be licensed in Texas, and
Correct.
that creates a Wild West scenario, right? So how do you vet those guys? And I go up against these guys all the time, where I'm at $75,000, and their customers are like, "Well, I'm getting prices at 55 and 52 and 63," and I'm like, "Have you checked them out?
Correct.
Do they got 5 stars on Google Business? Have you seen any of their work? How do they show up and present themselves? Because yeah, that extra 10, 15 grand that they're cheaper on could cost you 30."
Correct. That's absolutely very true. Like on a bigger project that we've funded in the past, uh, we have, as a lender side, we have to do a lot of digging into the the builder, right? We have to look at their website, we have to look at their portfolio, make sure they have
Hmm.
the experience that they asked for, to make sure they can able to complete the projects. We look at their insurance or not. We're looking at kind of pretty much everything about them, right?
Yeah.
Um, on top of that, outside of just about the builder information, we're looking at the insurance. We look at the borrower experience as well. That's very
Hmm.
important. Um, as you can see, a lot of lenders are slowly moving away from new investor. They either asking the GC to be on the loan with the borrowers just to make sure everything is complete correctly. So so that's
Interesting.
something new that the industry are slowly enforcing it because a lot of
Sure.
people are picking around GC.
Yeah.
um,
Well,
so
and
that's
and I believe that, and as a lender, and that's kind of what's always gotten me sort of confused is like I know the backside of a lot of these stories when I get underbid, and I'm just like, how do lenders keep doing this? Like, is you can't just put an estimate and a rehab number on a sheet and say this is it. Like, trust me, trust me. It's 50 grand, but
yes,
it's
sir.
a fire rehab. But how does a lender truly find out and vet that on a new build? You literally got to provide a lot of credentials, right? But
Correct.
on rehabs, it's kind of trust, right? Is it not from a lender side?
Um, to honest with you, it's not. We don't really trust the numbers that the borrowers provided. We more really trust the appraiser. So the process
Mm-hmm.
is when you submit a file, right? We take that scope of work, we submit it to the appraiser company, and they pick whoever the appraiser out there. They go out there, they estimate a number, right? That appraiser would tell us the exact number. Let's say for in the firehouse situations, right? It's more cost morely like literally double the amount than the 50,000.
Mm-hmm.
So the appraiser put that number and they give it back to there's a third party called the appraiser reviewer. So that
Mm.
reviewer usually has some kind of experience related to construction, rehab, or that had done in the construction for a while, and
Verifying the numbers.
they verify the number.
Mm.
Um,
That's smart.
and
It
then on the
probably takes longer, probably slows the process down, but
it's just depend on how heavily the rehab is and
yeah,
how deep they had to look at. But
yeah,
you know, on a something like this, it usually move pretty fast. On a fix and flip, usually about 2 weeks, sometimes less, depend on the lenders.
yeah,
Uh, but usually, the reviewer make sure the numbers make sense and also make sure that the appraiser is using the correct numbers as well. So it's kind of like
yeah,
the balance, right? So we're not totally focused on the appraiser. Say, hey, this number is $100,000, or they use the wrong comp. We see that all the time. We see
yeah,
appraiser using a lot of time the comparables came back lower, which is just ridiculous. But
yeah.
sometimes we have to deal with that, and then we try to rebut that.
Yeah, well, and that's kind of, what I've been talking about a lot lately is, and this is where a lot of this conversation and me and you came in was let's get together and talk about, the true engines of these deals because the without the contractor, a good contractor, like they're the engine. They're the ones that get out there, they put the boots on the ground, they put the material in. They're the ones that are actually making that added forced value to that home to reach those numbers, which the lender is trusting. So,
Correct.
that investor really needs to be skilled. They don't have to. I've seen people and posts and whatnot is wholesaling like, you don't need to know rehab numbers. You just need to get it under contract, and that's up to the buyer. And I look at those, and I used to comment on them, but I don't even waste my time no more because it's just silly. Because you don't have to know how to write up a line item bid, but you've got to have an idea within at least 10 to 15% of what things are going to cost,
Right.
because you can't force what I see so much in this industry is you're taking a round peg and trying to force it into a square hole, and it just don't work, right? And then that's when the contractors, I need tighter numbers. I need tighter numbers. Well, if a contractor out there is looking to get a job and keep working, and he brings a $45,000 bid in, and you're like, well, my budget's really around 35, and they're like, well, we could probably do it for that. No, they're cutting something, right? And
Correct.
then what does that impact? So you might be able to get it done for 35, but then what I always keep telling people is, well, but your ARV isn't going to get hit because you're doing a lesser rehab. You don't factor that. You're like, oh, I got my rehab done 10 grand less. Well, hold up a second. Think about the whole picture.
Correct.
If the contractor is taking a 10 grand less on the bid, do you think your results are going to be the same? There's just no
No.
way. You can't do it. So, anyways, they're not thinking all the way around, and then the lender gets hit.
Correct. And then most people they don't really know the lender guideline that much, to be honest with you. Uh,
Right.
in a fix and flip projects, there's holding costs that can add to it, but most people they don't add to that. There's closing costs. You have to make sure that everything numbers correctly, and usually most lender are doing around 70, maybe 75% of ARV. But
Mm-hmm.
a lot of buyers right now they are buying at 80%, 90%,
Oh, I've seen it.
which I don't understand how they make their money. Um, they if they do that kind of thing, um, whenever they decide to refinance, they have to bring money to closing on
Yeah.
top of bringing money at closing during a fix and flip, but during a refinance as well. So it's kind of double closing already. Cost
Yeah.
more.
Yeah,
Um,
those holding costs, they can really take you out, and if you're not factoring those in. The other thing is too is like on new builds, banks require contingency,
correct,
10%.
correct.
That's all, that should always be, a requirement in rehabs, but it's never done, right?
Yes, sir.
Very rarely done. I put it in mine, and then usually the customer wants to take it out. Well, we'll just take that out. And I'm like, okay, just so you know, then any little thing that changes, I can't just get done. I gotta submit a change order.
Correct.
Uh,
And that's what people doesn't get is once the lender approved that scope of work, it's very hard to change. You
yep,
they gonna like, okay, why is this number increased versus the
yeah,
original number?
you're
Same thing with
underfunded then, right?
correct, correct. Same thing with like documentations. We have a client that try to pull the very last minute. They give us so the original bank statement was different from the final bank statement. They're like, okay, how the heck is why is there two different bank statement, right? So
Mm,
that same thing applied to the scope of work as well. You have to
oh
use
my gosh.
whatever the underwriter approved you. You cannot change it. So unless the appraiser is telling you, hey, the number is higher, then go back to your bidder and say, hey, why is this number changed, right? But
Yep,
if they approve you for that amount, you can get stuck with that. If you run out of money later on, that's on you.
it
Uh,
is. They would have to. You can do it. You can get it
correct,
done, but with the understanding that you've got to have that in your own reserves.
correct. And then when you get to that point where you run out of money, it's very hard to ask for more money, or in our industry, what we call a mid construction. It's very hard
Mm.
to refinance a projects that are already built by and funded by another lender and try and get a new lender to come in.
Oof.
It's just it gets a little bit harder to do it. I mean, we can do it. It's just it takes some time to
Mm-hmm.
find whoever willing to take that risk, right? Because they don't know how the original lender doing the diligent part. So a lot of time,
Right.
most lenders like, nope, we don't do misconstructions. Uh, they don't want to do any of that. So they want to either very beginning, that's it. Um, So a lot of
I
time,
believe it.
we've seen a lot of
Well,
stories that
and
that
that goes for contractors too, right?
correct,
So, I don't want to come in after anybody else. No way. My prices are actually higher if I come in after everybody else, or there's a I don't know line item, right? Like
correct,
that contingency, like because if I'm going to come in mid construction as a contractor, because a lot of times that's what happens. They get fired, they walk off the job because it was underbid and they're underfunded, and then I'll get a call and it's halfway through and the studs are up and the PEX is in, and that's where it stopped. I'm like, well, there's a good chance I may have to redo all of that. What? It's already done. Just start where they're at. No, it's not how this quite works, because now my name is on everything
correct,
before whatever I touch. And
correct,
that's what people got to understand.
correct. So that brought up another example that one of our next guest speaker later on in episode 2,
Awesome.
he's gonna be talking about his experience. He done two fix and flip. They both we went through like a whole horrible experience with GC because we kind of new to the industry. Uh,
Yeah.
so the first one I'll let him tell a little more about it, but I kind of just briefly talk about it. So we got screwed by the original GC, uh, way under bid. Then there's a bunch of issues that the first GC didn't notice about, like the mold, there's flooding, the GC didn't expect that kind of thing in the area.
Yep.
And, he didn't really check the area to see if they flood or not. So when the second GC coming in, the price, of course, added an additional 20, $30,000 to it. But
Hmm.
lucky enough, he has the fund to cover the additional cost. But in most, in most cases that invested really don't.
Nope. They got to
And
go out and get Gap Lender or
correct,
yeah, yeah. And those are very risky, like you said, because um, there's already unknowns, right? But then you
correct.
then you put a contractor in there and pull them out and start over. The unknowns get even hairier because yeah, why'd they leave?
Correct. And
For
and
a lender,
so
I think that would be scary.
it does it's make the lend like I said, mid construction or those kind of situations is very making the lender very nervous of saying yes or no on yes on the loan. Um, Due to that reason, a lot of lenders will not do mid construction. Some willing
Hmm.
to take a chance, like private some private lender will do it, because if there's a good equity there, they will do it. But
Yeah.
most of the time, they're like, nope, we don't want to touch it because for whatever the reason that they think, right?
Yep. Yep. Well, there's a that goes back to I've lost, money on several projects just in the learning curve, right?
Yeah,
So if you're okay and you have the understanding that you're going to make mistakes and you're going to pay more than what things are going to cost by those mistakes because there's a learning curve, then good. But yeah, those that are ignorant to that are unfortunately kind of a very lost cause. And I see a lot. I drive by a lot of them. I get calls on a lot of them that are just dead projects and they're just failed and bailed out and they're just sitting there.
yeah. And like I have a lot of projects that came on my table, but unfortunately, uh, like other lobster, there's no way we could fund every single project came on our table. Some we can do it, some we cannot. Um,
Right.
Whoever told you, hey, I can fund every single project, I call that, bullshit.
Yeah,
Even
yeah, it ain't gonna work.
even the most experienced LO in this industry, they will not able to fund every single project in their pipeline.
Right.
Because not every single lender will do it. It's just really hard.
Well, not all money is good money. Not all projects are good projects. Not all and vetting that out is huge. And so, like a podcast like this, where you got guys with experience sharing their expertise and what they've gone through is huge. Is a huge value to the community. So hopefully, people are listening to this and taking heed to these advice and these experiences because
Correct.
it's these come from real world experiences.
Correct. And then that's brought up to the another thing about lender, right? Most people think, oh, lender are here just to get your property. No, we don't want that property because it
No.
costs us more to foreclose the property because we have to go to attorney, we have to go to the tax people and then all that kind of stuff. It's just more messy, right? So our goal is to land on a perfect projects. You want to make sure that you succeed and come back for us for more fun and just repeat, growing your business. We don't want to
Yep.
say you do one and then you end up, going foreclosure. We don't ever want to do
Yeah.
that. It's just like I said, it's just a headache. And I just want to be upfront with people, like, that's not our job. Our job is to make sure you're successful on every project. But in order for
From a financial standpoint,
correct,
not a running a project standpoint.
correct. So
Yeah.
we want to make sure that, you know, in order for us to help you success to where you at, make sure that you have to do your own, you have to play your role as well, not just, hey, depend everything on the lenders, right? We can only do so much. But depend on your choosing the right GC for instance is the number one
Mhm.
key. Without without that, it's just difficult.
Yeah.
Uh, and then
Yep.
guidelines getting more tougher and tougher uh, as the industry is changing a lot.
Yeah.
Um, like
Which actually I kind of like.
yeah,
So
we,
guys that do it the right way, we like tougher guidelines because that means less people can qualify.
correct. So like for example, ground up
Things are done
construction.
the right way.
Correct, yes, sir. So like for example, ground up construction. Let's switch gear a little bit. So ground constructions
Yeah.
before a lot of lenders like, oh, we can do new investor. You have zero experience. Yeah, great. We can lend you money on ground construction. Now, what we've seen in the industry is they require you to have at least minimum one or two before they fund you the
Hmm.
ground construction. Or the way to go around that, not a way around it, but different way to approach it is you partner with someone that has more experience, like GC, like someone in the industry
Hmm.
for a long time.
Yep.
Uh, so you can get the loan. Uh, and people always
You're
like, I have one customer asking me why I have to partner with my GC. I don't want to spend money with them. Uh,
got to get experience somehow.
correct. So the reason they do that is they want to make sure the projects doesn't get foreclosed. They want to make sure that you actually making money out of it and everybody benefit from it, not just one side or one other side. Correct. So
Hmm. Yep.
um,
Failed projects hurt more than just the investor. That's for sure.
correct. It's hurt everyone that's involved in the whole project. So it's hurt the investor, hurt the builder, it hurt the lenders, right?
Yeah.
You
Yep.
know. So like if a project fell, for instance, and the investors just walk, right? Not only that we lose the money that we provide to the investor at the beginning, we have to put our money into the projects to
Yeah.
finish the projects. So like you said, if we bring another GC into the projects, that could cost us more than what the initial cost is.
Yeah,
But
I've heard other lenders when they talk about that, they pretty much add 20% to whatever the potential finish of that project is. So if it's an $80,000 project, 30 is out, and there's 50 left, they add 20% on top of that 50 because that means they got to go find a DC. They got to go and do the work and the legwork, and that's not what they do every day. So
correct,
they know they're going to have to pay more,
correct,
and so obviously you don't want that.
yes, sir. So, um, is there any kind of advice from the GC perspective that you can give to, like, let's say someone very very new to the industry, they want to get into fix and flip, they have no idea how to choose GC. Do you have any advice for them, like what route to take, how to invest the GC or builders or anything like that?
It's kind of a good question, honestly, and I think it's a good conversation point. But you've got to find a way to like see their work, right? So a good GC is always going to have projects going on, and that's kind of how I vet my subcontractors, right? If you don't have any work going on, and you keep calling me, I'm kind of scared a little bit, right? Like it's you may be really good and your marketing is just off, or there's a language barrier there or something, which can happen. But if you're not busy and you don't have projects to go see, there's usually that's usually a number one problem. So like for us, I'm like, hey, come on out to League City, come out to Alvin, come out to Tomball, come wherever we're at with a project and check out our work, right? Go to my website, right? You start website, any past customers that they've worked with, definitely do that. You can call investors that we've worked with and they'll tell you, turnkey, top notch, all the way through, or, they have issues or whatever. If you don't want to reveal that information too, that's a red flag, right? No projects, a red flag to go see. You know, don't have referrals. Are not willing to share referrals. That's a red flag. Things of that nature are red flags.
Gotcha. Well, yeah, those are very good as well. But also besides GC, my recommendation is always also invest the lender as well,
Yeah, I was gonna
because
say.
the lender can either break or make the project for you, right? So,
Mm-hmm.
and then outside of the lenders and the GC, making sure that you are buying by a correct price. You
Mm-hmm.
know, don't buy at 80%, don't buy at 90% ARV. That's not going to make you money
Yeah, yeah,
unless you have some kind of different strategy. But if you want to sell it, it's going to be a little difficult because you're going to be asking to put a lot of money down, especially if you're buying 80 and 90%.
yeah.
Because on a fix and flip, most lender will do a 70, maybe 75% top. Very rare that they do 80%. That's a very small number.
Right.
Uh, and to make it even worse, on a new construction, a lot of lenders are cutting down to 65% ARV.
I've
Sometimes
seen
even
that.
sometimes even lower than that. So, you know,
Mm-hmm.
make sure that you adjust to the market and make sure you actually follow the market, see where it go. And for me, because I'm a broker, right? So I shop around a lot with different lenders, partners that I know I work with. And
Right.
to stay on top of the market, I just call some of my capital partners that I know with for a long time, for the past 5 years, and ask them, hey, how's is any guideline change to your lending? Is there anything that I need to know to make sure I prepare myself and not only myself but the borrower as well. And then watching different uh seminars from top loan officers.
Mm-hmm.
So like for example, this morning we talked about new mortgage, how they talk about how the economy coming and all that kind of stuff. So those are kind of information that
Yeah.
make me stand out from the rest of the.
Yep. Well, and another thing too is you kind of when you go into a project, it's kind of like a marriage, right? So
Sure,
you're joining together a lot of partnerships for 6 months or so. And you kind of want to, unfortunately, whether it's a contractor or a lender, you also want to kind of plan that divorce ahead of time, per se, right? So what I always say is think with the worst in mind. If you're okay with the worst in mind, then you should be able to proceed, right? So also, I'm guessing in as far as like a lender and then partnering with a contractor, um, finding out their pay methods, right? So how are they
sure,
doing their draws? So because for me, like we move fast, I can do anywhere from 7 to 10 grand a week. Well, not
right,
a lot of lenders are willing to put that cash forward that fast, right? Because
sure,
a lot of contractors can't do it, so they think they're just getting scammed. So when you're vetting out a lender, I would imagine, and you can probably speak to this obviously the best, is
correct,
that draw process, right? The draw process, is it fast? Is it slow? Is it pictures? Is it how, what is it like? What is the process? What submittals do you have to have? Like those types of things, because speed is of the essence in a project. You need to move through these things fast, get it done at high quality, quickly, and that's where this relationship really matters, is because the investor has only the beginning and the end control, the buying and then the selling. But that two pieces in the middle to get to that selling point, which everybody gets paid off on, is very critical, and that's the lender and the contractor, and those
Correct.
processes, you know. And for me, like, you know, I charge typically 30%, 30%, 30%, 5 and 5, right? Because I
Yep.
can move fast and I've got the backing. You don't want to pay every contractor 30% up front. They're going to
Yeah.
run with your money.
Of
But
course.
with the right person, you can. And then with the lenders, right? If a lender is known for slow draws, well, if I don't get paid, I stop. I don't keep working. Like,
Correct.
if I don't get paid, I stop working. So you need to know, as an investor, what's that lender's draw process?
And that brought it to a very good point. I'm surprised that not many investors are willing to ask that, right? I see
Yeah.
people just like, oh, I'm concerned more about the rate and this and that. I'm like,
Mm-mm.
okay, what about the draw process? Uh, like, you have to know how many draws that lender offer for you, right? It could be one, it could be four, it could be five, whatever the amount is, right? And
Yep.
then you need to know, are they going to send an inspector out, or are they going to tell you, hey, go take a picture of the house and then send it back to us, and we can wire the money after we verify it.
Yep.
Um,
Turnaround time.
Correct.
Yep.
So let's say, for example, one of the lender that we use always have the inspector go out there, right? Find out how much it costs, because every single
Yes.
draw schedule or every time an inspector go out there, it costs money. It can range anywhere from $125 to $250. So it's just,
Sure.
make sure you know that number. And I'm just surprised that a lot of investor, no matter how much, if they knew or experienced, they don't ask that kind of question. They're like, I want to know the
Yeah.
rating. I want to know the term. It's like, okay, great.
Hmm.
What about
That's
the
the
rest?
starting point.
Yeah, that's the starting point. But what about the rest? Uh,
Yeah.
the rest of the other information you need to know that can kill your projects, right?
Oh, absolutely. Yeah, yeah. And that last thing you want to do is slow a contractor's momentum.
Correct. And then uh, another question that I've seen a lot is investor think, yeah, if I don't like that lender, I can always refinance out, put another lender in. Yes, you can, but it's gonna cost you money and expenses.
Yeah.
So that's including cost of title, cost of closing, more money that you have to, you know, pay in order to get that
Hmm.
original lender out and replace with a new one. So
That's right.
it's always best to, like you said, you know, verify them, making sure that they do what they told you to do. Um, and most, unfortunately, most people don't do that. They just worry
Yeah.
about, hey, the rate and the term. Okay,
Yeah.
great.
Well, that goes hand in hand. It's the same thing with, and that's where this is a very good conversation. And again, like I said, I really hope people take this to heart. It's not just the price, right? So like in a contractor, like, it's not just the price. Like, how are you going to get me from start to finish, right? What's your change order process, right? What's your you know all those things to get you to the finish line, right?
Correct.
Because speed is money, right? Money, time is money. So you don't want to be slowing things up by not having that information, and not knowing how they handle things.
Correct. So yeah, so I think this is a good way for us to start the conversations. Um, I can guarantee you that a lot of lenders does not want to start these conversations, but I don't really care. I work with a bunch of good lenders, and they always, be willing to open, and that's my goal, right? To teach people and making money at the same time as well. That's always the benefit of it.
It's a good byproduct.
Correct. But my always goal is, hey, teach people, uh, try and offer much information that I can to the clients and help them grow, right? Because
Yeah,
at the end of the day, the more they grow their business, they're gonna come back to me, um, and that help my business grow as well. So, um, so
yep.
that's my main goal, right?
Yeah, the repeat business. The repeat business is definitely where it's at. You get familiar with people, and that's kind of like what, like I tell people a lot of times in the construction business, is when you find a good contractor or a good lender or good, whatever it is, as long as they keep fair pricing and fair services, you got to stick with them because relationships is how this thing gets done.
Correct. So to end this first webinar, thank you so much for coming.
Yeah, man, this is good.
If you have anything, any additional add to it, I would love to hear more. So the floor is yours.
Yeah, no, I just hope people see this. Put comments down, give us some ammunition, give us some feedback in regards to what do you want to hear from a lender contractor construction side point of view. Because, like you said, I really don't care when you know what you stand for and you're willing to provide the best products and services out there that are unmatched, and you're providing education to the community. I don't know why people would ever get offended by that, and if they do, that's on them. So take this advice, take this opportunity from guys like Tam, who's full of integrity, and myself that really want to help the community. And then if you have projects, obviously, let us know. We can help you with that. But outside of that, put comments down, tag, like, share, subscribe, all that wherever we're going to put this, and get engaged because this is definitely a roundtable conversation.
Yes, sir. So for the like I mentioned earlier, for the next episode, we're gonna be bringing one of my close friend who's a investor. He got into the industry about 2 years ago for his first flip, right?
Nice.
So he's gonna be talking about that projects, see the experience that he went through, uh, all the issues that he facing, any obstacle that
How
he done.
smooth it went.
Yeah, that's what it went.
Because the highlight reels of Facebook, right? Every project out there that you do is great.
Correct. And that's what we always look at Facebook like, hey, why is every so always glorify stuff? What
Successful.
happened to all the hidden crap that go behind the scene that
Oh,
nobody talk about? So he's gonna be
yeah.
talking more about that kind of issues that he run into. Look, like I said, luckily you know he was able to overcome it. Uh,
Yeah, it's good.
but many investor, if they would say that's the issue, they wouldn't be able to do it. Like I hear so many stories um, in this industry. I could literally, like I told people that I could literally write a book about this industry, like all
And you will.
the thing about it. um, but yeah, he's gonna be talking about that, and then later down the road, we're gonna bring different investor from
Yeah.
different projects. Like for example, we're gonna bring someone that does investing in straight up multifamily. He never done any residential. All he does in his life is just apartment, fix it up, buy an apartment, fix it
Yeah.
up, and then sell it. So that's his niche, right? So we're gonna
That's
try
good.
different things. And then one of the other episodes that we're gonna be talking is a servicing company. That is something that I think is very important on behalf of the lender, but also uh, on the investor as well. If you have the wrong
Mm-hmm.
servicing company, that could screw up everything else down the road for you. Um,
Sure.
that's something that myself, and one of my partner went through it. It just went to the wrong service company, and it's just a nightmare.
Yeah. Oh,
And
yeah. It's a team. That's what we were talking about earlier. It takes
correct.
relationships, right?
So, well, hopefully you guys enjoyed this. Sorry, I'm nervous about this. This is the first time I'm doing this.
Man,
Uh,
it was great, dude. This is great.
so, well, thank you so much, Adam, for coming. Let's
Yeah. Thank.
let's meet again in about 2 weeks on February 20th. That's when Jesus Morin he's gonna come in and talk about his experience
Yeah.
and his background. So he went from a fix and flip. Now he just lend money. He doesn't want to do any more fix and flip.
Okay. There
He's
you
like
go.
he's like I'm tired of fix and flip. I don't want ever want to do
Yeah.
that again. So he
Yeah.
just switched gear.
It's definitely a thick skin game out there for that. Yep.
Correct. So yeah. Well, thank you so much, guy,
It's
and
good. No,
have a
thanks for
wonderful
putting it
night.
on.
Yes,
Yeah.
sir.
You too.
Thank you,
All
sir.
right, man. God bless.
Yes, sir.